I would say it's a historical low right now. So we closed our fund last year. We got most of our commitments coming from existing LPs. Fortunately, we have a very long-term LP base, about 50% coming from US, from nonprofit organizations like endowments and foundations. So they are quite long-term thinking. They're still investing in existing GP relationships. But most of them, I would say, have stopped building new GP relationships. So I don't think it's a good time to start a new fund, a first-time fund, right, in this market. Obviously, China is still much bigger than the Southeast Asia countries combined. I think we also have some investments here in Southeast Asia, and I think it's a very good market to be in. But I also like China, so most of our companies are headquartered in China and serving China market, and many of them have extended their market to Southeast Asia, and some of them are focusing on the Southeast Asia market only. So I think both markets are very good. In terms of number of deals and amount of money, I would say in the last couple of years, they're going to high-tech companies, manufacturing companies, such as semiconductors, EV-related, clean tech, probably healthcare, right? So I would say these sectors are absorbing a lot of capital in the last 2 years, and a lot of investors, both RMB investors and US dollar investors, are moving away from consumer companies. That's what I've seen in the last 2 years. Well, so our approach is a little bit different than the other funds, but probably other people will, find different sectors to focus on. While we focus on patterns, we try to find patterns in different large industries that can build long-term sustainable companies. And the patterns we find are a few self-reinforcing patterns that help companies build growing competitive advantage in the sectors in the market they're in. So actually, in this year, this is a very difficult year, and last year was actually more difficult. So in last year, our portfolio companies have grown by 30% on average. So the total gross revenue have grown 30% over the previous year. And in the first half of this year, the same group of company have grown 40% on top of last year. And many of them have turned profitable. Actually, most of the large ones have turned profitable. So I would say they're resilient. I think it's reflects it's a result of our approach, partially, yeah. So we've been pretty lucky on that. Right now, a lot of people are spending a lot of time on AI, large language models. Well, I think this hype will cool down a little bit, right? But I think some companies will emerge. I'm very excited about such opportunities, right? So, but I think most of the companies will not make it, will not meet the expectations of investors, and will not be able to raise funds. And a small number of them, maybe a few, will be able to actually generate a lot of users, attention, or even make money. Right? Actually, one of our company is which launched an app a few months ago, have got a 1 million cumulative registered user already. It's an AI companion company. I think companies like this who are actually helping users who have good retentions, good accumulating very good data that can improve itself and over time build a first mover advantage, will be able to sustain. So that's my expectation.